What do you think? Ordinary income or capital gains? Let's get into it. Hey, everybody, this is Heather from Kingdom Economic Builders. Welcome back. So, today we are going to talk about the dinar and the tax treatment. So, many of us in the wealth transfer community, we are invested in the Iraqi dinar. It's something that we felt led to invest in. And if you guys follow the Dinar Den, you might have seen my video with Stefan talking about the tax implications that Iraqi dinar has and what IRC code it actually falls under. So most tax professionals and CPAs, I would say investments in foreign currencies is not something that they probably deal with on a regular basis. Not too many people just invest in foreign currencies hoping for a revaluation to come about. You might have a handful of people that do, but it's just not something that they typically run across. When you ask your tax professional or your CPA, it might be something that they have to research. When Stefan asked me about it, I was like, actually, I really need to research this. I came to realize from my perspective of what I could find. And then later on, actually, Stefan from the Dinar Den even had somebody on his show that I believe the person knew an IRS agent, and he asked the IRS agent, how would this be treated? Well, the number one question that you have to ask is, how are you invested in the Iraqi dinar, or how are you invested into these foreign currencies? Because that would actually depict how it is treated from a tax perspective. If you, like many of us, are just buying into the dinar, you are a US citizen and you're going to the exchange and you're purchasing the dinar and physically holding it, there is one tax treatment for that versus somebody who might have traveled abroad to Iraq and converted their currency to the Iraqi dinar, and they just have a surplus that they didn't use there, and they decided to hold on to it. And then, of course, you have like Forex tradings and, different things like that. So, the perspective that I am going to speak to is if you are like most people within the wealth transfer community, how would it be treated? You are an individual, you go to the exchange, you are purchasing Iraqi dinar and you're holding it. What I have come to the conclusion is ordinary income. And the person that was on Stefan's show that knew the IRS agent, he also said that they would treat it as ordinary income. Now, there are different tax cases that you can pull up where people tried to challenge it in court, ordinary income or capital gains. Many of the ones that I pulled up, they actually lost the case, and it was treated essentially as ordinary income. With this, I will also break down how it is actually taxed. So a lot of people might think, like, say they made $1 million on their Iraqi dinar investment, and they might think that the whole $1 million is subject to the 37% tax or, whatever category they fall into. But that's not necessarily the case. I will kind of break that down as well, just so you have a clear understanding of what we're looking at and how to prepare for it. You guys might ask what actually governs foreign currencies, and that would be IRC code 988. It is the one that oversees foreign currencies. Okay, so let's break down what IRC code 988 actually means. IRC code 988A1A is the general rule. Foreign currency gain or loss attributable to a 988 transaction is treated as ordinary income or loss. However, the statute itself carves out an exception for individuals engaged in personal transactions under 988E, which we will go into that. This exception is what converts the treatment from ordinary to capital for someone simply holding physical dinar as a personal investment. So here's the statutory framework. The general rule, ordinary income, that's section 988A1A. Except as otherwise provided in this section, any foreign currency gain or loss attributable to section 988 transaction shall be computed separately and treated as ordinary income or loss as the case may be. The default under 988 is ordinary income. What is a Section 988 transaction? So we have under 988C1B, a 988 transaction includes acquiring or becoming an obligor under a debt instrument denominated in non-functional currency. Accruing income, and what that means is like you have you physically hold dinar. So dinar is considered a non-functional currency here in the United States, meaning you cannot use a dinar at the store. So say you went and got, something from the store and the total was $5. You could not use Iraqi dinar as a functional currency to pay for that. So it's considered a non-functional currency within the United States. So basically acquiring Iraqi dinar would be step number one, which would fall under the Section 988. Accruing income or expenses payable in non-functional currencies. Some people might trade work, say they do some work. I had a client recently ask if I would trade some bookkeeping and tax preparation in exchange for a non-functional currency. I personally did not accept it just because I don't want to deal with the back end stuff, but some people might accept that. They might accept the exchange. The next one is entering into forward contracts, futures, options, or similar instruments. The next one is disposition of non-functional currency itself, which is Section 988 C1CI. Such disposition shall be treated as a Section 988 transaction. So disposing of physical Iraqi dinar is a Section 988 transaction. Step 3, the personal transaction exception, which is 988E. So here is where the override would occur. The preceding provisions of this section shall not apply to any Section 988 transaction entered into by an individual, which is a personal transaction. Section 988E2, because you have like the governing rule, which is Section 988, and then you have all of these exclusions, right? You have all of these other things that fall under it that kind of bring about different rules or exclusions. So Section 988E2, if a non-functional currency is disposed of by an individual in any transaction, and B, such transaction is a personal transaction, no gain shall be recognized for the purpose of its subtitle by reason of changes in exchange rates after such currency was acquired by such individual and before such disposition. The preceding sentence shall not apply if the gain, which would otherwise be recognized on the transaction, exceeds $200. So what that typically applies to is, say you traveled to Iraq, you had dinar in your possession, and you came back to the States, and all of a sudden it revalued and it was worth more. Up to $200 of that increase is non-taxable, but then anything in excess of that $200 is taxable. So that's just kind of saying that's what that exclusion applies to. But typically, you would need to show proof that you acquired it while you were currently in that country, whether it was for work or vacation or whatnot. So Section 988E3, definition of personal transaction. The term personal transaction means any transaction entered into by an individual, except that such term shall not include any transaction to the extent that expenses properly allocable to such transaction meet the requirements of A, Section 162, other than traveling expenses described in subsection A2 thereof, or B, Section 212, other than part of Section 212 dealing with expenses incurred in connection with taxes. If you did travel to that other country, and say you travel to Iraq, you receive the currency within that country, you come back to the States, you're holding on to it, you can prove that you acquired that currency while you were physically in that country, whether it's military, work, pleasure, who knows, and you're physically holding on to it, and then all of a sudden the dinar revalues. It is saying that can't withhold your travel expense. It doesn't necessarily consider travel expenses part of the cost of acquiring the currency. So it just kind of gets in depth as far as what the rules state. So the key question that we have to ask ourselves with the Iraqi dinar, is it a personal transaction? A personal transaction under Section 988E3 is one where the expenses are not deductible under Section 162, trade or business expense, or Section 212, investment profit seeking expense. So here is the critical interpretive issue. If the individual bought dinar purely for speculative investment, hoping for a revaluation, the expenses allocable to that transaction arguably do meet the requirements of Section 212, production of income and investments. If so, the transaction is excluded from the definition of personal transaction. Under Section 988E3B and the general rule of 988A1A applies ordinary income. If the individual acquired the dinar for personal use, example, travel to Iraq or personal spending, and the gain is incidental, then Section 988E applies and the gain is either not recognized if under $200, which that goes back to the $200 threshold. You traveled to that country, you physically acquired it, it revalues, you made $200, you wouldn't have to claim that as income. If it exceeded the $200, you would have to claim it as income. Capital gains, if it exceeds $200 under the general Section 1001, Section 1222 principles, once 988 is turned off by Section 988E1. So that would be for personal use. So what this is saying is it is trying to split it out between, did you invest in it just for personal investments, or were you invested in the Iraqi dinar for personal use? Was there a need for you to have Iraqi dinar, for instance, if you traveled there, or were you just investing in it, hoping that it would revalue like many of us are? So if you are invested in it just as an investment purpose, it is not considered property like many other investments because Section 988 governs it. It has its own governing rule. And the governing rule of Section 988 for foreign currencies, it's treated as ordinary income because it is a non-functional currency. So we can't really consider it property because according to the United States, it's not worth anything. There's no trade value there. If you acquired it through travel and it happened to revalue in the meantime, that is when the $200 clause fits. And anything in excess of the $200, you would have to claim as income. And then different sections would apply. It could be considered capital gains. More than likely, if you purchased Iraqi dinar as a speculative investment, held it in hoping for a revaluation, had no personal use purpose, the transaction's expenses are properly allocable under Section 212 investment activity. Therefore, under Section 988E3B, it is not a personal transaction, and Section 988E1 does not override the general rule. And the results, the gain is ordinary income under Section 988A1A. I just wanted to put proof out there because so that way people can pull up the IRC codes themselves. Because a lot of people were questioning it, like, how do I prepare for this? How is it going to be treated? It takes us into, okay, let's say I made $1 million on my Iraqi dinar investment and it will be treated as ordinary income because I bought it as an investment, a speculative investment. Many people think all of a sudden the whole $1 million would be treated as, or it would be 37%, but that's not necessarily the case. So let me break down how taxes actually work. And this is not just for foreign currencies, this is for everything. So that way people can kind of understand. Let me break down how income taxes actually work for ordinary income. So let's say you make $1 million off of Iraqi dinar and it's treated as ordinary income. Let's say you make $1 million, period. It doesn't even have to be off of Iraqi dinar, it could be off of anything. And it's treated as ordinary income. We're not talking capital gains like crypto and stocks and stuff like that. We are just talking about ordinary income. So this is kind of the tax bracket, and this isn't the current year that I had this poll, and how it works. This is for married filing jointly. I figured probably majority of the people that would be looking into this, it's married filing jointly. So that's just kind of why I did that. So this is kind of like a theoretical, the exact amounts aren't completely precise. This just kind of gives you an idea of how your income is taxed with the current year tax rates, okay, and thresholds. So let's see scenario one, and this is 2025 tax rates. Okay, so 0 to 23,850. So it would be the amount in the tax bracket is 23,850. Your rate would be 10%. So your tax would be $2,385. Now, this is up to $1 million, right? And anything in excess over that would be 37%. So the first $23,850 would be 10%, and your tax would be $2,385. The second bracket would be 12%. So up to 70, from 23,000 to 73,000 would be 12%. And then 73,000 to 109,000 would be 22%, and so on and so forth. So it's not that the full $1 million automatically hits 37%. It goes in stages and there are thresholds. And so when you're trying to calculate it, you would have to look at the thresholds that you're meeting because you would then bump up to the next threshold. So the first 23,850 based off of 2025 for married filing jointly, the first 23,850, your tax rate would be 10%. And so that's kind of how your taxes work because I think a lot of people are trying to back into it thinking if I made $1 million or $5 million or whatever amount that you're intending on making, automatically the whole thing would be at 37%, and that's not necessarily true. So I just wanted to bring clarity around that so people kind of understand it. The second thing that I wanted to share was as you get into needing to owe taxes, the IRS will penalize you if you do not make appropriate quarterly taxes. You just need to meet the amount that you made the prior year. So let's say this year, all of a sudden, the dinar revalues, and you're like, I don't even know what to do with my taxes. You would want to look at last year's taxes and make sure that you pay at least what your tax obligation was for last year. So let's say your tax obligation was 24,000 or 40,000. You would want to make sure that you at least paid the IRS what your obligation was the previous year. If you do that, then you will not have a penalty for late filings. That's the second thing, just to give people a heads up as far as tax planning with the dinar or any investment. Even when you step into entrepreneurship, when you get into needing to pay quarterly taxes, you just need to make sure that you meet the prior year's tax obligation to refrain from having a late installment penalty. So we talked about how it would fit into ordinary income, that the governing rule is Section 988, and as long as it wasn't for personal use, then it would fall under ordinary income. I explained what would make it personal use, which primarily is for travel or if it was for business or, whatever other reason you acquired it. But if you're just buying it and holding it, it falls under ordinary income. So then we ask, when would capital gain treatment apply? It would apply if the currency was acquired for genuine personal use, like travel, living expenses abroad, but not investment. Investments does not make it personal. So if you had it for personal use, just like we were talking about, it would then, it could potentially then fall under the capital gain treatment. If the gain exceeded $200, if it was for personal use, the first 200 is exempt and you don't have to pay taxes on it. If it is in excess of the $200, then you would have to pay capital gains on it. You have Section 1256 contracts. Those are a little bit different. Those do the 60/40 split. And so some people might be investing in foreign currencies online and it falls under the 1256 contracts. Would be capital gains, but it would be split out between 60/40%. The next thing is for Forex traders. Under Section 988A1B, a taxpayer may elect to treat capital gains and losses on forward contracts, future contracts, or options as capital gains or losses. But this election must be made before the closing day of the transaction, must be made before the close day of the transaction it is entered into. It applies only to instruments that are capital assets and not part of a straddle. And it does not apply to physical currency disposition for Section 1256 contracts. Regulated futures on qualified exchanges, the 60/40 blend rate applies automatically, and Section 988C1DI excludes these from 988 treatment. So for Forex trading and 1256 contracts, there could potentially be a different tax treatment for it. It could potentially fall under capital gains, but that does not apply to physically holding foreign currencies. From my understanding, people can challenge me on this. I love it because then that gives me more to research on it. I would rather know that I know that I know, but everyone that I have spoken to on this, all the research that I have done and different avenues that I have looked into, that is my understanding of it. So just to recap a little bit, if you're physically holding Iraqi dinar and you bought it as an investment, Section 988 rules it. It's going to be ordinary income as far as I can see, as far as I can research, and as far as anyone else that I have asked. If you do Forex trading or futures or other contracts like that, it doesn't have the same application and it could potentially be capital gains. If you physically travel to the location and that is how you acquired it, whether it for travel or business or whatever, that treatment is completely different. But I think what applies to majority of us is ordinary income. If you made $1 million, not the full $1 million is not taxed at 37%. It is a scale. You hit the certain thresholds under the tax percentage that you reach, and it gradually grows from there. I hope that helped you guys. If you do need help with this, message me. We're going into, no, we're in the second half of 2026, and now is the time to start preparing for your taxes. If you are looking for a platform to grow with, you're wanting to grow professionally, find your purpose. Kingdom Economic Builders, we talk about business, we talk about some taxes. It's an open forum. It's an amazing place, a great community. We're like a giant family there, and we would love to have you. Um, we focus on spiritual growth, personal growth, and professional growth. We just finished our Vision Mission series where people really dived in, spent some time with the Lord to figure out, Lord, what are you calling me to? We did a teaching on the seven mountains. I gave them a little quiz to help them identify their mountain. It was kind of surprising how many people recognized the mountain they were called to, and they were a little surprised by it. We helped them identify their vehicle in which they're going to use for their calling. And the next phase is actually setting up a business plan. If you are looking for a platform, Kingdom Economic Builders, if you are wanting help with your taxes, I will put my information below. I hope this helped you. I believe physically holding Iraqi dinar is ordinary income, but I'd love to hear your argument. See you next time. Bye.